my role here with Variety International. I was filling the shoes of someone who had been in the organization for a very long time and whose shoes were very difficult to fill. As much as Neil has done so much for this organization, my predecessor at 1025 was also somebody who had been around for a very long time, but grew to love the charity and what we do for children. And so was very honored when Nancy asked me if I would take part and join the international board as treasurer as well. So I'm very excited to be here, and I'm looking forward to a long relationship with the charity. I am a CPA. I have been a CPA for many, many years and function as a chief financial officer for several organizations. I'm currently working as the CFO for two smaller organizations. So I get the opportunity to work with a lot of the same issues that are facing our own charity: scarcity, cash flows, making things work in a rather crazy world over the past year, but thoroughly enjoy what I do. And again, looking forward to a long relationship with the board and the tents. I will also preface this tent talk to say that, again, baptism by fire. I'm quite new to the board and asked if I would mind talking a little bit about something in the finance world. And while many of you probably will think this is about as exciting as watching paint dry, I don't disagree. But I thought I would start out in very kind of basics and just provide everybody with a very broad overview of some of the things that we think about as a treasurer, as a finance person in a nonprofit organization. This is very basic, but again, I thought it was a good starting point. I know at the AGM, Neil gave a somewhat lengthy dissertation on the annual report, and if you haven't gotten an opportunity to read it, while it is very long, it does have a lot of very valuable information. And I know that what we ask the tents to do as far as participating in uploading or providing us with financial information may be somewhat tedious and not their favorite thing to do. It does yield a wealth of information and ultimately improves the credibility and the sophistication of the organization. So it's all very interesting. And if you haven't read the annual report, I would encourage you to. What I would like to go through today is just, again, as I said, a very basic understanding of the core fundamental statements that exist in good financial reporting, and also some best practices in accounting. And I recognize that many of the tents have very lean organizations, and they're very, you may even outsource your accounting function, but these are just high-level things for you to think about as you navigate your own tents and you talk to your boards about things that they should be thinking about and you should be sharing with them. So if we want to get started, Sharon, if you can move on to the next slide. And I will also apologize for this kind of flashy template that I used. We don't have a standard template at Variety, so I've used kind of a jazzy little PowerPoint template. So hopefully you can bear with us. So today, as I said, I want to talk a little bit about what nonprofit accounting is and how it differs from for-profit accounting. I also would like to talk a little bit about some of the accounting statements that are required in an audit or a review and the reports, and then some best practices for nonprofit accounting. And then I'll leave time at the end if you have any questions or you want to dig into something deeper. I'm also can be available by email, and if I don't know the answer, I will be more than happy to try to go find it as well. Next. So what is accounting? Something that was created many, many, many centuries ago, but in effect, it's a language that provides us information about the financial position of an organization. I think by learning the language, you can communicate and understand financial operations of any and all types of organizations. So accounting is definitely a universal concept. Most of my presentation today will be guided by what I call GAAP, or by what US standards are. I do know that as an international organization, there are international standards, and we'll touch on them lightly. But for most of my career, I've been espoused in GAAP accounting, but we'll talk a little bit about international standards as well. But so in fact, accounting is simply a language. And the more you understand about accounting, the better you can navigate through your financial health and well-being of your organization. What is nonprofit accounting? It differs slightly from regular accounting in that nonprofit accounting is a unique process from which nonprofits plan, record, and report their finances. So most of us may be familiar with for-profits where they focus on earning a profit, generating returns for shareholders. Nonprofits focus more on the accountability factor of accounting and accountability to our donors and to our contributors. Our donors and our contributors grant us, contribute money to us in an effort that we provide the best care for that for the financial well-being of the charity, of our tents. And it is our fiduciary duty to make sure that we manage our finances with the greatest of care. Donors have the right to set restrictions on their contributions as to how our funds are deployed. And that is why nonprofits employ something called fund accounting, which is very different from for-profit accounting. In addition, for-profit accounting is all about distribution of the profits to its shareholders. In nonprofit accounting, as many of you know, we do not distribute any of the funds. They remain within the organization and again are deployed, whether or not they're restricted or not, according to the mission of our nonprofit. Next. So the types of funds that you often hear talked about in nonprofits are restricted funds, which are contributions that can only be spent on certain projects and activities. Many of us are familiar with that. If a donor is giving to a certain project or wants it spent against a certain initiative, they will restrict those funds, and we must restrict the funds both physically in our bank accounts and in our statements so that those funds are only dispersed for what the donor's restrictions have allowed. There can also be temporarily restricted funds, which are contributions that just should be spent on certain projects or activities until a certain time period elapses. Once that time period has elapsed, they become unrestricted funds. And unrestricted funds, often called your annual funds, are contributions that can be spent on any activities or projects that require the greatest needs at the discretion of the boards. Next. So I touched on this a little bit. So the measurement rules that we use in the US are generally accepted accounting principles. These are rules called GAAP, GAAP. And there are rules and proclamations that come from a board called the Financial Accounting Standards Board, or FASB. Internationally, there is another board, and that board is called the IFRS, or International Financial Reporting Standards. There has been many initiatives over the past several years for GAAP and the IFRS to adopt a universal language that all countries would use. But to date, those initiatives are still somewhat while progressing, have not come to a place where US GAAP is being rolled into international reporting standards. The two are very similar. Most of the concepts are very similar. There are some subtleties, and there's certainly some difference in the standards, but for the most part, what we're going to be talking about today is somewhat universal. There is also an initiative called the International Financial Reporting for Nonprofits Organization, and it has a very simple acronym, the IFR4NPO. It was an initiative that was started several years ago to develop international standards for all nonprofit organizations to report against. I believe the committees are seeking, have announced some tentative rules that they're seeking comments on through the end of this year. Once the comments are addressed, you could see some new standards coming out on the international landscape within the next, say, 2 to 3 years. Next. So we're actually going to talk about the financial statements now that are required in US GAAP for audited statements. These statements are the statement of financial position, which is often called our balance sheet, statement of activities, which is called more commonly as your income statement, Statement of functional expenses, which is a new statement that was adopted as a standard in 2016. And then the statement of cash flows, which we'll talk about a little, is actually a statement which will show the changes in your cash balance from the beginning of the year to the end of the year. Again, all of these, if you have an audit and your tent does go through an audit, these are required statements, so you should be somewhat familiar with them. Again, these are all very important to measure the health and well-being of the individual tents. Next. So this is your statement of financial position or your balance sheet. And where possible, I was able to take the information from Neil's reports and actually show you live real information. And this is actually the balance sheet for the consolidated view of all of the tents. Basically, a balance sheet is formatted where you have assets and liabilities and net assets. And a good equation, oftentimes called the accounting equation to remember, is that your net assets should equal your assets minus your liabilities. Assets in simplest terms are just things that you own, O-W-N. Liabilities are things that you owe, O-W-E, and your net assets are your contributed, accumulated equity in the nonprofit. Net assets in a for-profit are often called stockholders' equity or shareholders' equity, which simply equal the accumulated wealth in a for-profit. In our case, because we don't have shareholders, we term the accumulated wealth of the nonprofit organization net assets. Assets are listed in order of their liquidity. Liquidity meaning how quickly they can be converted into cash. Your most liquid assets are listed first, and then your less liquid assets would be listed thereafter. In our case, in our consolidated balance sheet, you see cash would be first, then cash on deposits and short-term investments, and then other assets. Again, they're listed in order of their liquidity or ability to be turned into cash. And then underneath our current assets, we have less liquid assets of an investment portfolio, and then our non-current assets, which primarily consist of, your property, plant, and equipment, any non-tangible rights you have, and then your investments in certain other associates or organizations. For more detail on all of this, Neil does a very good job of explaining all of the assets of the organization, of the consolidated organization in his report. So as of the end of our fiscal year 2020, we had $86 million of assets. Next, we have our liabilities. And again, liabilities are amounts that we owe. And they are also listed in order of their date that they become due. In other words, the date that they become payable to someone. We have current liabilities of about $14.5 million, a lease liability, and then some long-term liabilities. So our total liabilities at the end of our fiscal year were $22.6 million. And then lastly, we have our net assets. Our net assets are segregated between net assets that are restricted, as we talked about. Oftentimes, we are provided with contributions and grants that have restrictions, and then our net assets that do not have any restrictions. And that is a requirement that in your financial statements, you should be able to define and segregate your assets with restrictions, your net assets with restrictions versus your net assets without restrictions. So that at the end of fiscal 2020, we had $63.6 million of net assets. And as you can see, if you take the assets minus your liabilities, you should be able to equal your net assets. Again, the balance sheet is in balance, hence the word balance sheet. So we can move on to the next slide. Our next slide is called a statement of activities, more commonly known as our income statement. And all of these statements actually tie to one another. So that's the beauty of accounting and the reason that you have a debits and credits and the systems of balance and checks is that all of the statements tie back to one another. So in your statements of activities, you'll have income events, which are either events that you plan or fundings that you receive. Income from camps is actually large enough that it's broken out on a separate line. But you can see that the total income, or all the revenues generating activities of the organizations, equaled 63.2 million in our last fiscal year. Excuse me. After your income events or your revenue events, you list your expenses, or amounts that you expended, resources that you expended to generate those revenues. And our total expenses for the fiscal year were $33.6 million, meaning that left us $29.6 million of funds that we could distribute to children. Of those funds, we ended up distributing $27.2 million, or total grants of $22.2 million. Leaving us a change in our net assets, or a difference in the amounts that we distributed versus the amounts that we took in, less what expenses we paid, of $2.3 million. Again, that's just taking the amounts that we had available to distribute, which were our incomes less our expenses. So the $29.6 million was available to be distributed, of which we ended up distributing $27.2 million, leaving us a difference of $2.3 million. So that's a residual. That's a positive amount that we will then take, and that will go back over into our balance sheet and be shown as addition to our net assets for the year. The beginning of the year, we started with $61.3 million of net assets. And when you add the $2.3 million that we had excess of what we did not distribute over what we had available to distribute, the net assets at the end of the year become $63.6 million. Next. This is a statement called Statement of Functional Expenses. Unfortunately, this is not, this information is not relevant to our charity. I had to pull the draft. I was not able to find this. And again, this is something that's required by US GAAP. In 2016, there was an initiative by FASB, the board that creates the rules for GAAP, or the GAAP, excuse me, the principles. And it was determined that for nonprofits, that in order to increase the transparency of the expenses that a nonprofit was spending, they would require the statement of functional expenses that basically breaks out your expenses against the types of functions or the areas of where they're expended. So they're broken out against program services, or actually programs that are grant giving programs, versus supporting activities, which could be just general and administrative expenses, and then fundraising expenses. And again, this was in an effort so that there was more transparency and visibility into how charities, nonprofits were in fact spending their dollars. And I know many of us are very sensitive, sitting on the board of the charities, when each month we talk about grants and approve grants. And one of the things that always comes up when we're deciding whether or not to approve a grant to an organization or to a charity or even to an individual, we discuss what the percentage of monies that a charitable organization collects that they give out versus what they spend on general and administrative expenses, overhead expenses. And oftentimes, as a rule of thumb, we like to know that an organization that we're granting monies to is doing its best to give out as much of those dollars as they can to their organizations in the form of grants versus spending it on administrative expenses. However, it would be wrong to say that we should expect them to give out 100% of what they collect, because no organization can exist without overhead, as we know. So all of our tents, as we all know, have organizations that for the most part do have salaries that we pay to people, do have rent payments, all of these being overhead expenses. Excuse me. So it would be wrong to say that we expect most organizations to not have overhead. Overhead is something that's just the cost of doing business. But again, this was a statement that gives you, if you're looking at an organization that publishes financial statements, you can look at this type of statement right here, and you would be able to see exactly how much they're giving out, how much, excuse me, that they're spending on general and administration functions versus, say, actually giving out or fundraising. So it's a very valuable statement that gives you a little bit more insight into how the organization is run. And it is required in US GAAP. Next. And the last statement we have that's required by US GAAP is actually one that is a little bit more sophisticated, even in finance crowds. I'll tell you a little anecdote in a second, but it's called the statement of cash flows. And I've highlighted again that all of these statements are interrelated. So the statement of functional expenses actually breaks out all of the expenses that were on the statement of activities. So it ties back to that. As we saw, the balance sheet at the end of the year should tie to your ending net assets, which you should be able to prove out from your statement of activities as well, the change in your net. The change in your cash flows, your statement of cash flows, simply shows the change in your beginning year cash versus your ending year cash on your balance sheet. So in the beginning, and it relates back also, as you can see, to our statement of activities, because it starts out with what was the amount of our change in our net assets from our statement of activities, and at the end, it ends out with what was our cash at the beginning of the period versus our cash at the end of the period. So again, all these statements tie together. But what this statement does is says, take all the activities that you had from your income statement and all of the changes in any of your balance sheet accounts over the year, and prove out that the total of all of the changes in your balance sheet plus the changes in your statement of activities, your change in your net assets, prove that the change, all those changes tie back into the change in your cash. So if you go down, you can see that all of the change in our net assets was $2.3 million. Again, that's a positive, meaning that we had at the end of the year $2.3 million more dollars that we had available to distribute that we did not distribute. And then it takes all the changes in your balance sheet items, and then it's broken up into three buckets. The first bucket is called operating activities, which are all of the changes in your net change in your assets from the statement of activities, plus all of the changes in your balance sheet over the year, your beginning versus ending balance. It then breaks out another bucket called investing activities. These are where you've invested in debt, or you've made changes in your investment accounts, or you've purchased computer equipment, or you've purchased assets, fixed assets. So you can either use or provide, meaning we got more cash from investing than we used in investing. In this case, you see that we used $2.1 million in all of our operating activities. In this case, we provided, or we had excess of $433,000 in investing activities, meaning we got more investments than we used. And then the last bucket is called financing activities, and that would be debt. So we, many tents were able to secure in the fiscal year 2020 payroll protection loans in the US. And so those were positive. Those were monies into the tents. So it's again broken up into three buckets. You can see the first bucket being your operating activities, which is your balance sheet and your change in your net activities from your income statement. Investing activities, where you're actually investing in fixed assets or your investment portfolios. And then financing activities, which is primarily debt and the interest to service that debt. At the end, that change, or the sum of those three buckets, is your increase or decrease for the year in your cash. In our case, our cash was increased by $2.6 million, which is the sum of each of those three buckets. And if you add that to the cash at the beginning of the period, you get the cash at the end of the period, which should tie back over to our balance sheet. Very useful statement. My funny story, I used to teach accounting, and one of my lessons was, I don't know if many of you remember, but the back in the late 80s, the Enron crisis, where one of the first U.S. companies, excuse me, to go through, that was fudging its books, basically a very high-profile energy company, multi-billion-dollar company that was fudging its books. And how they were basically found out was through this statement, believe it or not. A bunch of reporters from Fortune magazine were doing an article on the successes of Enron and started to dig into their financial statements. And this is, again, a rather sophisticated statement that where if you're hiding things, it becomes kind of apparent. And it was these reporters from Fortune that actually ended up discovering some of the fraud that was going on at Enron, where they were fudging the books and creating bogus assets, basically, and inflating their earnings. It was discovered through some digging into their cash flow statements. And it's a pretty interesting, again, I'm not an accounting nerd. If you know me, you would know this is quite odd, but I would recommend this DVD, or it's a movie called The Smartest Guys in the Room. And it's just a documentary about the Enron crisis. Again, you know, if you're sitting around Netflix on a Friday night and got nothing to do, it's pretty interesting, but it will go through kind of how that fraud was uncovered. Next. So, you know, those are the required statements, and I encourage you when you work with your boards to share as much or as little as they like. I know, having worked with my tent for the past, you know, almost 10 years now, we go over the financials. I have a speaking part each meeting, and I do go through some of the changes in our financial statements. We go through where we are year to date on our budgets, and we talk about, you know, things like if we're, you know, we have outstanding receivables, or people have committed to give us grants and they're kind of getting old and we haven't collected them. And I can tell you that from my own experiences, I generally don't usually get a lot of questions, but I encourage you to continue to share as much data as you can with your boards. It is our duties as you know, board members to ask questions and to be involved and to make sure that, you know, that our management, that, you know, is taking care to make sure that we are doing everything we can to be accountable to our donors and our contributors. But, you know, again, it's not the most exciting thing, but I encourage you to, you know, just continue to spread as much financial literacy to your boards as possible. So speaking of best practices, I thought I'd just spend the last part of the presentation here just talking about some very, very, you know, simple, basic best practices that you can employ in your own tents. I do understand and recognize that most of the tents are very lean and are running with very few resources, but these are some things that I think, you know, again, basic things that you can try to adopt in your own tents to just improve the controls and follow some best practices. You know, where possible, share and segregate financial duties. Again, you know, for the most part, many of the tents outsource their finances or their accounting, and, you know, and hopefully they've outsourced them with reputable firms that employ these best practices. But if you don't, or even if you keep some internally, you know, this can be done as easy as, you know, if the executive director can look over the reconciliations on a periodic basis that are being performed by the accountant, and, you know, just make sure that there's some oversight. Or if you do have at least, you know, 2 people in your tent that are, you know, helping with the accounting, to the extent possible, have them share duties where they're both not doing, one of them's not writing the checks and doing the bank recs, right? Try to separate those duties where possible. You know, in our tent at the International Board, we have a process whereby Sharon, we have hired an outside accountant for a minimum cost who actually does the bank reconciliations, while Sharon will actually write the checks. And it's just a way for us to share those financial duties to make sure that everything is, in fact, adequately separated. Implement security policies and restrict assets. It's always a very good idea to, you know, make sure that you have policies in place that prevent anything from happening that would necessarily challenge your financial statements. And if you use software programs such as a QuickBooks or any other software program, you know, restrict access to only those individuals that need to have it. And then make sure that you're always changing passwords and just being smart about it. So in fact, people are not, that you don't want accessing your financial books and records are accessing them. You know, take an inventory of your fixed assets, you know, to the extent possible. If you're sitting on computer equipment or assets, you know, such as cell phones or whatever your assets might be, it's always a good idea to periodically make sure that what you think you've got on your books is actually still in your possession and in good working order and hasn't, accidentally gone missing. Conduct regular audits. I know many of our tents have outside auditors come in and perform audits and published reports. Again, this is a really important thing because auditors are able to not only opine on the fairness of your books and records, but oftentimes they'll be able to provide suggestions or recommendations if they see weaknesses in your internal controls. That's what they're getting paid to do. And then lastly, an annual budget. Definitely a best practice is to prepare an annual budget. If possible, do it by month or quarter, no less, and review it frequently. And this is something that not only is it good practice to do, but it's also very good to share with your boards. They should be aware, should be requesting to know where you are against your budget. And if you go to the next slide, I've actually just given an example of a budget. This can be, if you've got any Excel skills whatsoever, this can be, again, very basic. But what you try to do is you try to plan what your revenues are going to be by month versus what your expenses are going to be by month and trying to match the two up. And, your expenses are either going to come from something that is fixed, like a salary or rent, right? You know what those are, or something that might be very predictable because you've got a history. So generally how I start a budget is I'll go back to the prior year and I'll look at the prior year financial statements and I'll say, okay, I know that on average I spend about $20 a month in bank fees. And so I'll plan that out. Or I know once a year I have to pay a license to the city of Los Angeles of $700. Things that are predictable because there's either an agreement or a commitment, such as a rent or salaries, we know how much we're paying people, or something that historically has happened, and so you can plan and project it against what you historically know to have happened. And kind of the same with your revenues. When do you think you're going to have your events? Historically, what has the participation in those events been? Who's been sponsors? Can we count on those same things? Or when do we know that we're having contributions coming in because we know each year there's a donor who's giving us X, Y, or Z dollars. Again, it can be very basic, and it's just an attempt by month. Again, try to keep it as small a time frame as possible, but to predict what your expenses are going to be versus what your revenues are going to be, so you can see where there are any gaps or where there potentially could be challenges in your cash for the year, right? Where are we needing to actually do better or spend less? We can go to the next page. Again, I think it's important that you and your boards look at an annual monthly budget. You can use your historical actuals, or if you have fixed amounts, commitments, your rent, your payrolls. I try to be very conservative when I create a budget simply because I'm an accountant. I don't want to be very bullish or very optimistic because you want to try to avoid surprises that could cause you some indigestion later where you might have a cash deficit that you were unaware of and scrambling to make bills or pay payrolls or do things like that. So again, try to be conservative. And by being conservative, I mean try to plan for the worst, but hope for better. You use your operating budget, what we just looked at on the last slide, as a basis for your cash projection. Because at the end of the day, most of our budgets are pretty representational of our cash flow. In other words, we collect our revenues in the month we have them or shortly thereafter. And we spend our money in the month we say we're going to spend it or shortly thereafter, right? Because it's for things like rent or payroll. So you can pretty much tell by your budget, I think I'm going to collect in revenues this much money this month, and I think I'm going to spend this much money. So that basically your budget can also serve to show you what your change in cash is going to be for the year. So you pretty much have a gauge on how much money you could be giving out to grants and whether or not you're tracking to that number, right? Because you don't want to fall short. And then always very good process is to review your actual results, what you thought that was going to happen against your budget, right? Or your actual from what you thought your budget was going to be. And let's say you say, oh, I thought I was going to, have cash of $100 extra this month, but yet I have negative, $200. Why did that happen? And go back and review your assumptions and make sure that whatever you reviewed isn't due to timing, which means, oh, that's because that's going to happen coming up in this next month, so I need to adjust, or some kind of permanent difference where, oh, I didn't plan for Janelle's raise this month. Isn't Janelle lucky? So again, just review your actual results so that you're making sure that you're updating your budget where necessary. And I really encourage you, although again, these are not topics that most boards always want to talk about. We're much generally more interested in talking about grants and giving out the money than actually how we're earning the money and our budgets and our financial statements. But I think they're really relevant, and it's our jobs to get the boards more interested in financial literacy and how the actual financial and the financial position and health of the organization. So it's our jobs to get them interested in that. One other thing I'll say, this has been a crazy year, or 2020 was a really crazy year. And I don't think many of us, at least in the States prior to the top of 2020, would have had any idea that we would all be shut down in business and sheltering in place for a large part of 3, 4, 5 months, and that business was going to be as crazy as it was. So it is oftentimes, while a budget is a great tool, you can't plan for everything. I get that. And this year was very unusual, or last year was very unusual, but it still doesn't mean that we shouldn't try. And as soon as we became aware of the pandemic and how it was going to impact our tent, at least with Tent 25, I sat down with our executive director and we created a new budget. And we basically said, okay, we're not going to be able to do as much as we thought we could. We're not going to be able to give out these grants. We're not going to be able to do this, and we're going to have to cut spending here and here. It was a really good practice. And in each month now, when we have our board meetings, I go back and I will tell the board where we are in our cash position. And I think it's just a really good practice for them to get in the habit of understanding where we are so that they have an idea of how generous we can be with our grants. And it's just really, again, a very, what I would call just best practices to do. I think that's the end. So again, I apologize if this was too basic. Just joining the International Board, I know that Neil is a very seasoned and gave a great report that was more lengthy and a lot more detailed. And again, I encourage you to read it. This was just kind of the basics 101 and just a brief overview of some of the things I think that you could be doing in your own organizations, your own nonprofits, and what we should be looking for as we guide our boards to making good fiscal responsible decisions. Any questions? Is everybody still awake?
Well, Janelle, I appreciate it because I don't really have the lingo of an accounting. I don't have the accounting language down yet, so I certainly appreciate this. Even though I'm not in a position to have to use it that often, it's definitely appreciated. So.
Hi, Janelle. I'm Stacy. I'm the executive director of Texas, and my director of finance and my board chair are on this call. And I just wanted to say I appreciate, this was great. It was a great review. Skylar, my finance director's texting me going, whoa, we can check all these off. So, but what I wanted to say is I really appreciate your nod to our responsibility as executive directors of empowering and informing our board and really helping them understand their fiduciary responsibility. I think that gets overlooked so often, and it's so critical to our growth. And my hat's off to my board chair, Steve, and his oversight, and my finance committee's oversight. Skylar, for doing such a great job. But thank you for that emphasis. I think that's critical.
Yeah. Again, like I said, from my own experience with 1025, I often don't get a lot of questions, but we're in the discipline where I definitely give a full report, and it's good to encourage their participation, but yeah, absolutely. Definitely have to remind them sometime that there's something that's going on behind the curtain.
Thanks, Janelle. It's Barbie. And I just want to say, I thought that was excellent. And I think it's important that we keep it basic because, and not become tax experts and accountants and everything else, but everybody needs to know the basics, and all executive directors. And I was just going to actually say what Stacy said, that it is really the responsibility of the EDs to make sure that board of yours is up to speed on all this.
Can I ask one question in particular about in-kind support? Because my auditor actually gave it to us pro bono last year. And he said, oh, it's okay, you don't need to count that. And I never know whether it's up to them to count it, whether they want it accounted for or not.
Yeah, actually, you're the owner of your financial books and records. And so your auditors are independent. And I'm surprised they said they don't count it, because personally, I think it should be. But again, they can provide you with recommendations, and normally I do defer to them. So, but I would think, it's interesting they said that, because there's two sides of that transactionally. Whereas if we report it as in kind on our side, they should be reporting it on their side as well. So I'm surprised they said that. But again, we own our books and records, and while they do obviously have to opine on the fairness of them, and we seek them for recommendations, I'm not exactly why they didn't, but.
Yeah, and I think he more deferred it than anything. He just didn't answer it at the time because it was in the midst of chaos. And I was able to, we're under the threshold where we don't need to have one, but I preferred to have one just because of the craziness of the year. But in other in-kind donations, it's the same thing. Sometimes I wonder whether they don't want it to be counted and whether that's okay for us to not count it.
Yeah, that's, and again, in-kind donations are unique to nonprofits. And part of the reasons that, I think that international board gathered, because there are a lot of questions, a lot more complexity to nonprofits than for-profits often. And in-kind is actually one of them, and considerations of what should be counted, when it should be counted, timing, and then the multiple sides of the transactions. But I'll defer to your auditors.
Thank you.
Well, great. If there are no more questions, I'll give you back your day.
Thank you, Janelle. That was great. She'll be doing this again this afternoon. If anybody wants to hear it a second time, we're also recording both sessions. We also will be sending out a short questionnaire to find out what you felt was most helpful, and maybe topics that you might want to have expanded going forward. And then I also just want to remind everybody that our next Tent Talk right now is scheduled for August, and it will be focused on board governance. But if you'd rather switch that topic up, we're welcome to have input. Thank you, Janelle.
Yeah, and I would also say, Nancy and I were on the phone with a tent a couple of weeks ago, and the executive director was very overwhelmed with the pandemic and things that had happened. And everyone has my email address. I am a CPA. I certainly have opinions, and I can help. And in this case, it was volunteering to help help them apply for the PPP loan. I'm here as a resource if anybody needs an opinion or something to help with. I'm always glad to do that.